Good morning, traders. Sean here, tuning in with NeuroStreet and also ARC AI. And I want to welcome you to the AMA on the AT Trader. Before I go further, can you guys just give me a test of picture and sound? Everybody can see the screen good. Everybody can hear me well. There's no confusion. Right, we're good to go. Audio and visuals are good. Okay. So we're going to do an AMA. The purpose of this AMA is to go over the ARC Trend Trader that we did in the previous webinar. I want to demonstrate some setups. I want to trade some strategy software signals. I have no crystal ball, so whatever happens today will happen. I will show you the strategies and I will show you the concept. And AMA means ask me anything, Robert. And as I go through this, I'm going to do this in a very laid back coffee house environment, right? If you got a question, ask. I'm going to teach you some concepts. I'm going to show you some stuff. And I'm going to basically teach you how to, what I found to be the best way to use this system and this tool set. I normally don't host these AMAs, but I felt so strongly about the product and the system that I wanted to spend some more extra time teaching it. I truly do think that certain tool sets deserve extra attention over others, and this is one of them. AT means Automated Trend Trader. And so I just want to take a look here and just keep an eye on it. Yeah, so let's just wait for that to lift and let's give it some patience. So I need to cover a quick disclaimer, mainly because I'm going to be talking about trades, whether I'm in sim or I'm in live accounts, it makes no difference. If you are trading real capital or even sim capital, please understand the risk and know that past performance never guarantees future results. I'm not here to give you any advice. I'm here to teach you some things. I'm here to give you some experience and hopefully show you something that could ultimately change your perspective on trading. I mean, this is the whole goal of building out tool sets. ARC AI is a development company that we work with on NeuroStreet. We're the voice of the front of that. They're just developers and programmers, and we just code indicators. But the difference is that the system that I'm about to show you today is something that I've really gravitated to myself. And for those of you that know, I've been building these businesses and I've been doing this for a long time. So, the key here is to share with you stuff that I see working. So just know that if you are going to take any trades, be patient, learn what I'm talking about. Don't rush into it. This is a business of risk management. And if you have any questions, let us know. Okay. So need to see here what's going to happen. It's going to take a look at gold. Is gold going to break down? Yeah. So we're sitting around in no man's land here. It's coiling. So first of all, I want to talk to you a little bit about what's on the charts. I want to talk to you a little bit about what's on the charts and just explain a few things that we're using. The main tool set here is the AT Trader. So this is it's the Automated Trend Trader. It's the software that's producing all these automated trend lines. Now, I've got the system set up to my settings because I've ultimately found the sweet spot across some of these markets that I've gravitated to, and I really found that I like. And the reason for this is I'm only looking at major swings. I'm only looking at major swings. And so I'm not going to go into the questions until after I teach the basics here, guys, and then I'll spend some time going over questions because I do want to teach you what I'm doing and I want to share with you some of the things. Don't get alarmed by whatever trade I'm in right now. Like I already took a profitable trade. This could be a winning trade. This could be a losing trade. It's not the point of this trade. What this is the point of that I teach you what we're going to do, because when the market's set up, I'm gonna participate when there's an opportunity to. I'm just gonna scan here. There's nothing else going on. Yeah, the indices are kind of rolling over a little bit, so that could give my NASDAQ trade a little bit of a headache, which is fine. If it does do that, then I'll take the stop and I'll move on to the next trade. But the concept here is I really want to make sure you understand the indicators that are being used for the strategy that I'm showing. Okay, and so the Auto Trend Trader is an automated trend trading tool set. What it does is it's automatically calculating and forecasting market structure levels that give you the ability to plan really large trades in advance if you understand where to take them. Okay, if you understand where to take them and how to take them. Okay. And so there's many different trades. There's a trend trade and then there's a break trade. So the difference between the two is a trend trade will go like this, right? You'll have trend lines like this, and then this will forecast out in advance, and then it'll give you a trend trade when it comes down here, and you could take the trend trade and lift up. I'm not trading it this way. And I think that's why I'm doing so well. And I think that's why I've been so successful with this. And I've seen it work over and over and over again, is because I'm doing what everybody else isn't doing. I'm trading the opposing side of the trend traders, so to speak. Essentially what we're doing here is we're taking break trades. So when I got a trend that's going like this, in the right context, I'm looking to go short here for large moves. Okay. And when I mean large moves, I mean large moves. I'm not interested in scalping. This is not a scalp system. This is not meant for a couple ticks of chump change. I'm interested in the big impulse explosions. And I'm very comfortable taking a stop loss because it doesn't happen very often. And normally it's in transitionary situations, which will set you up for a really big opportunity once it transitions. And so what I want to do is I just want to let you know, yeah, like ES 153 ticks yesterday on that one signal. Absolutely. So a lot of traders are looking for the big trades, and they have a hard time identifying how to see them and where they are and what they're doing, right? So what I've done is I found a way to identify using structure along with volume and momentum. And then what I do is I look at, overall dominant bias on my charts, right? And so I'm just going to keep panning back over to gold, because gold is, see, that's why we're having a hard time. Gold's not ready to take out the floor yet. And so unless gold wants to drop down, we could see headaches in the indices, which is, it's part of the business, right? So we'll give it some time. So what I want to do here is I just want to kind of tell you what I've got on my charts and what you're seeing here. And I've got a market analyzer up here so I can track my positions. I've got a correlation tool because I do spend time paying attention to correlation. I want to make sure that I know that right now, okay, if I had an opportunity to go long, I would go long the top three stronger markets, right? Which is the Russell, the NASDAQ, and the S&P. And that's just common sense. They're all, in a strong correlated position. And the YM is the weaker market. So that's why I took the long on the S&P this morning, and I am taking the long on the NASDAQ because it does have positive strength correlation. Does that mean that the trade's going to work? Nobody knows that, but it's definitely a good way to filter fundamentals into taking signals on the right markets. Yes, because I don't want to try to go long the weaker markets, and I don't want to go short the stronger markets. That's just good common sense to help you make a decision on which market you want to trade. And so definitely looking at weakness in the gold market and also crude oil. Okay. And so that's why I'm paying attention to those trades. Now, the biggest thing for me is, first, I want to make sure that you understand the indicators that I've got on my charts. It's very simple. Okay. I'm going to explain why I have these indicators here, what they're doing for me, and why I'm using them. The most important tool here is the trend trader, because it's telling you where to get into the trades. That is the most important part, because that's the trend trader. Like, you need the trend trader to tell you where the big opportunities are, meaning where is the big structure levels. Now, if you get these settings wrong, or if you set them too small, or if you're too impatient, and all you do is want every single trend line break or every single trend line to be plotting off every single zigzag, you're not going to capture the big moves. You're going to get chopped around in the noise. And, most traders aren't prepared to wait for the big move to set up, which is why most traders never really capture the big moves. Now, if you can understand what I'm looking to accomplish here, I'm looking to get on the right side of the moves and ride the big trades. Okay, now how many of you guys would like to learn how to ride bigger trades and get on the big side of the market and how to see where the big trades are setting up? because a lot of times what's happening is it's not doing what most people think it's doing. Okay. Give me a yes if you're interested in learning how to see the big opportunities. Now, this means you'll definitely need to learn how to prepare for the trade, and you'll need to know the tool set. You'll also need to have the tool set. But what's really cool about this system is the other three concepts. These are already in your platform. Like, you don't need to buy them. These are not some, there's no hidden agenda here. These are just simply some basic tools and the trend trader. Now, I've got the Emaz. Okay. This is how I have my Emaz set up. When I did the launch webinar, I didn't have Emaz on my 5-minute chart. And one of the things that occurred to me is a lot of traders have a hard time deciding dominant bias. So dominant bias is, what's happening now and what's dominant in terms of the impulse to corrective moves, right? So I'll give you an example. Right now, one would say that the trend is down, okay, because they're looking at the structure and it's pointing down. But the dominant bias has shifted to the impulses being long right now. And so dominant bias is where you can see that the impulse and the correction, the impulse and the correction, the impulse and the correction, okay? And that transition happened here, right? This was the impulse and the correction, the impulse. And then it went from an impulse to an impulse, which is the beginning of an oscillating market. And then what ends up happening is you get these flatline periods, which is really messy trading. Now, don't get alarmed by this trade, guys. Like, I took it because it's a valid trade, whether it works or not. Like I said, it's here nor there. I'm just going to trade the system the way I traded, and I'm going to show you the setups, and we're going to wait for opportunity. Okay. I do want to take a look at the gold trade though, because it needs to set up. And a couple things you're going to need to know here, guys. A couple things that will need to be understood. S&P, the NASDAQ. I'm just paying attention on the markets because I need to see what's taking place, because I am taking trades on them, and I just want to make sure that I keep an eye on it. Yeah. Okay. So I've decided to put the 100 and the 200 EMA on the 5-minute chart, because it helps me remove that subjectivity around dominant bias. Okay. And so that you could look at structure, and you could look at, the overall trend of the market, but you can also look at the dominant bias with regards to current price action. And so that's why I have it set up like that. I've also set the 200 EMA on the smaller time frame chart. Do you notice how I don't have like the 20 or the 100 or the 50 or any of the 9 and the 21 cross and all that crap that everybody else is looking at? Like, let's just get right down to it. If you're doing what everybody else is doing, you're not doing what everybody else should be doing. Now, I get it. Now you're saying, oh yeah, Sean, but you're taking heat on this trade. Absolutely. But I would take that trade over and over and over again. Took those trades yesterday. I took 3 for 3, right? And took this first trade off the open. If we don't get the follow through, then I'll take the next trade, right? And I'm going to teach it to you. Now, a couple things that I do want to mention is that the stops are a bit larger here, because you're trading swings and breaks. So you're going to have big kill zones. Like, this is a kill zone. I'm caught in the kill zone right now. And a lot of times if the trend doesn't break, it'll suck you into the kill zone. But the key here is to understand that if you're not capitalized to trade those size of stops, then please just trade the micros. Like, that's all you need to do, is you just need to trade the micros. Okay. Because you're going to get the same structure levels, and you're going to get the same breakdown as the main contracts, which means you might not trade crude and you might not trade gold, which is fine, but you can still trade the indices. How many in here has traded the micros before? Anybody here trade micros? Right? They're there for a reason, guys. They're there for a reason. Yeah? Okay. Nothing wrong with them. Now, the other two indicators that I've got on the chart is the money flow index. Now, I want to talk a little bit about this before I go into the trade rules and the setups. The money flow index is ultimately a volume weighted oscillator. And the volume weighted oscillator is superior to the RSI. It is the RSI on steroids. So if you're looking at the stochastics and the CCI and the RSI and all that, none of that shit makes any sense to me because it's all weighted on price close data. And I understand, you know, some of you probably take well to some of those tools and you're probably like, I've been using it for so long. Well, I'm here to tell you that volume leads price. End of story. Don't argue with me. I'm doing this for 10 years. I've built 50 products. I know a few things about the market. Volume trumps price closing data. So if you have a tool that's using volume to feed the information, you have an edge that most people don't even realize. Now, MFI, if you want to learn what it is, Google what the heck is MFI. Okay, this is not an MFI webinar. This is an AMA on the trend trader. Just know this, that I've got the MFI on the charts because it's a volume weighted oscillator. And I use this to tell me when I can expect the trend breaks to really crush it. Meaning, when can I expect the volume weighted oscillators to feed the breaks of the trend structure? Okay. And I'm normally going to look at two factors. Now, I've got two of them on my charts here. I've got the red one down here. These are two MFIs. They're both MFIs, okay? And the red one, if you look at the data, it's set to 100. Like, when has anybody ever set an oscillator to 100 period? Eh? Like, has anybody ever set their RSI to 100 before? Or their CCI or their anything to 100? I doubt it. Yeah, right. Nobody. And I've got the faster one at 21. Okay. And so essentially what this means is I've got them tweaked for a reason. The 100 I consider the big daddy. And I want to pay attention to where it is relative to the 50 line. If I can get above this, we got some really strong momentum. If I can't get above this, then we're going to have a hard time. Volume is still down on this, which means that we're having a hard time getting above on the volume on this consolidation, which means that if we can get above it, I'm going to have a little bit more comfort in the trade. And that's just the data. Like, if the volume is going to tell you the data, pay attention to it. Right now, the NASDAQ has not been able to break that ceiling. And if we can get above it, then I'm going to have a little bit more comfort in the trade. Okay, that's just common sense. If volume data can feed the information, be confident in the information. Okay, the other thing I'm looking at is I'm looking at the divergence from the big daddy, because that's going to tell me a lot. And then the other one is an overbought and oversold oscillator that I've tweaked at 80-20, but over a 21-day period. So one of the reasons I do this is I look to see if I have divergence coming into the levels in certain situations. Now, this trade's not looking too good, guys, so I'm just going to give you the heads up that it's looking like it wants to hit my stop. So you got to just take with a grain of salt. And the S&P is holding the lows. The NASDAQ's having a hard time. It is coiling. So if this can do some magic here, you know, it'd be nice to see, but we are consolidating off a big report this morning. So we'll have to see what the market wants to do here. Crude oil is lifting. That might help pull the S&P up. And gold needs to tank. Gold needs to drop the floor here in order for us to really get some love in these indices, okay? So I've just learned, and the biggest thing that I want you to learn here is you need to believe in what you're doing. If you don't believe in what you're doing, okay, then it's going to be hard for you to sit through the trades. Like, one of the things that I learned in this strategy and this setup is you just got to let the trades work, because when they give you the follow through, they really give you the follow through. Okay. And so what I want to do is I just want to talk a little bit about the rules for the strategy. Now, Jim's going to put together a really nice document. He's already put it together, actually. We're just going to make one edit to it. We're going to give everybody this document. Okay. This is a strategy roadmap. This is a strategy roadmap that is ultimately going to map out everything that I teach you today. Okay. And what we're going to do here is the first thing I want to do is I want to talk about the higher time frame. So the higher time frame on this document says the higher time frame uses no indicators. We're just making one change on that. Okay. Everything else that I've just said is right here. So actually, I don't even need these. Jim's already got it mapped out, which is fantastic. And we're good to go. Okay. So the only thing I want to do is I want to make an edit to the document, meaning I want to look at the 100 and the 200 EMA. Okay. So if you look at where the 100 and the 200 cross, they cross here. And then they cross here. Right there. Yeah. To the upside. So this is where a lot of traders get dominant bias confused. They say, well, we're in a downtrend. Okay. But let's say you come to the market and you're sitting right here. You have a hard time making that decision because what's happening is you're getting these consolidations before the dominant bias changes, right? And so this is the problem with multi-time frame analysis. This is the problem with structure, looking at trends, looking at the impulse. The trend is there until it changes. Well, we're in the change of that trend right now. And so if I was just looking at price action, one would say, well, I'd like to go short here. Well, if that was the case, then you would have missed these long trades that really crushed it this morning. Okay. And right now, what I'm seeing here, if the market can do what it's doing, this is an impulse leg. This is a pullback to consolidation. If I can get that break and I can get that wedge to hold, we're going to get an explosion to the upside, right? That's just what I'm seeing. Okay. And most traders don't see that. And most traders get that wrong. Well, that's why the trend trader is so powerful, is it gets you on the right side of the big breaks. However, if you get the 5 minute wrong, you know, as a day trader, the 5 minutes is about as big as you want to go on this time frame, because I'm using 1 minute conversions on the Rankos, right? Like this is a Ranko chart. It's like a 35 brick Ranko, which is about the same as a 1 minute chart. And I'll give you the Ranko conversions. Jim, make a note of that, we give everybody the Ranko conversions on the document. Okay.
Yeah, sounds good.
Right. And we can just pull that from the algo trade room because
yeah,
we have all that for them. Okay, traders. My job here is to get you everything that we can do that here. Okay. So what I'd like to see is I'd like to see the volume break above here, and it hasn't been. It's coiling. So I need to see a break above here in order for us, and I need to see that break of resistance happen with volume taking out the highs. You see this? If I can't get those highs taken out here on this volume right here, then I don't really have a lot of belief in the tool, in the system setup, right? Not the system, but the actual trade itself. Okay. And so we're going to give this some time. What I want to do is I want to talk a little bit about the rules so that you can understand what we're doing here. And so we need to, before you do anything, I need to know what my bias is. Okay. So this is where a lot of traders get, so sucked into the trade signal, they forget what the hell they're doing. Okay. So if I know that I'm looking for a few things. First thing is I want to make sure, where am I above the 200 period? So if I'm coming in right now, I'm above the 200 period. Okay. So the 200 period is, let me just double check here. I wrote this down a little bit. If I'm below the 200, I'm going to look for shorts. If I'm above it, I'm going to look for longs. If the 100 is greater than the 200, then I'm going to be looking for strong longs. And if the 100 is less than the 200, I'm going to be looking for strong shorts. That's the only adjustment. Before it was just look at price action. But I want to give you guys a rock solid objective concept to follow. So right now you can see that we are trading above the 200. So I'm definitely looking for longs, but the 100 is well above the 200. So I'm definitely looking to go strong trades. Like I'm looking to go strong along the market right now. That's what I mean by that, is I'm only looking to take long break trades to the upside. Yeah. And that's why I'm long right now, this market. If I go to the S&P, what was my dominant bias this morning? My dominant bias was long, right? I'm trading well above the 200. 100 is above the 200. That's no question, which is why I got long that trend break Take a look at the S&P. I got long the trend break off the open. The only problem is we're in a really big consolidation. And I should have taken that trend break. I just missed it. That was a trade here. I'm already long the NASDAQ, so I'm going to just leave this alone. But this was a trade that I should be in right now if I was just trading and not teaching. Okay. So this was the break. I'm not looking for bearish. You took that one, MJ. Good job. I'm not looking for bullish trends. Like, I don't care about the trend lines down here. That's not what I'm looking at. I'm looking at the bearish trends. I want to see when the market breaks through those bad boys. Okay, that's the whole point. Okay, I just need to see the NASDAQ explode up, because if the NASDAQ can break this trend line up here, this is a great example of another big break. If the NASDAQ can break through this, right? This was the first attempt for it. It got sucked into the kill zone, but the lows held. And one thing I want to point out about the lows in here is that we're making equal lows, but we're starting to make higher lows in momentum on the Big Daddy. So this is why I have a little bit more confidence that there's a potential for this NASDAQ to really rip to the upside if we can get these other indices to follow suit. If gold can take out the floor here, another great example, let's talk about gold for a second. Gold is in what bias? A dominant bias to the short side. One would say, well, we're in an uptrend. We are in an uptrend. Last time we had a dominant bias that shifted was here, but it held the lows. This time it took out the lows here, right? So this is where I want to see if we can get gold to drop. And I would be really, really interested to see if we can get a trend trade to take out the lows in here and break this trade. Okay. And what I'm going to do is I'm going to look at, this is the last major swing. If it takes it out, there's a potential in here, okay, for us to, let's take this 0.5, 1.5. If we can get that breakdown on gold, then I'll look to short gold, because gold's in an immediate dominant bias down. I'm therefore looking to short bullish trend lines, which means if I get an uptrend here like this, I'm looking to take the breakdown of it. Now there is a section here which could be a very dangerous area in here, which means if they can't take out the floor in here, this might only give us T1 before ripping back up. And if it holds the floor, then we will probably shift bias on the higher time frame. So we're going to be patient. Why? Because dominant structure is still up, but the immediate dominance is still down, right? Like we're transitioning. And if this kicks in, nobody knows if you're going to go into a wave 1, pull back to wave 3. But if this does break down, you're going to be in wave 3 at the beginning. And that's the whole point of understanding the trend breaks, is that you're in wave 3 at the beginning. So let's talk a little bit about the next rule set. Okay. So let's go in here and just take a look at the strategy setup. So if I'm looking for rules to get in, higher time frame is bullish. I can only go long breaks on the smaller time frame. If it's bearish, I can only go short breaks on the smaller time frame. If this is really important, if the smaller time frame is above the 200 EMA, I'm going to take breaks on their own. So let's go take a look at the NASDAQ trade for a second. Was this trade above the 200 EMA? Yes, it was. Yes, it was. Okay. So therefore I executed without any hesitance. Now there wasn't any divergence at this time. It was just simply a break right at above the EMA on the 200 on the smaller time frame. So that's why I took that break there. And I didn't have any divergence. I made lower lows. I made slightly lower lows. So there wasn't any divergence. Okay. But if we take a look now coming into this, if we can get this break up here, if we can get another push to the upside, I want you to pay attention to what I'm seeing here on these lows. Equal lows across the floor, and I'm making higher lows across all of those momentum, right? So if this can break, what's it doing here? It's coiling, it's building a position, yeah? That's why it's taking so long to get out of here. There's a lot of big business going on in here right now. That's just the reality. That's why it's not moving. It's because the guys that are making anything happen in this market are putting on size right now. And I'm on, if everything goes according to the way I can project it, and if I can see that the dominant bias on this is yes, long, which it is, we're in an uptrend on the 5-minute. I'm on the right side of my dominance on that time frame. Therefore, this should be a consolidation for a continuation to the upside. And that's why I'm long. And that's why my stops aren't tight, because sometimes you will get stuck in those buildings of those positions. Sometimes you won't. Sometimes if you're not quick, man, you're going to lose it. Like this, like if you're not paying attention to the trend lines, you're not going to catch that trade. Like this is looking like it wants to rip. You see it? It's like if you're in that trade right here on the S&P, this was the first trade I took. It ripped quick. Boom, 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 boom. This one here. So where would my trade plan be on this? This is what I like to do. I like to see this in advance. Yeah, you can use the easy algo for this. I love the easy algo for this because it gives me that ability, right? It gives me the ability to pre-plan my trades. And so if I'm looking at the S&P, dominance is up, no question about it, yeah? NASDAQ dominance is up. It's just taking its time. It's building a bigger position. And so what I'd be looking at here, if I was, say, taking the S&P, and let's say I was trading like this, I was down here and all of a sudden it started forming that downward trend line. What I'd be doing in here is I'd be putting my plan on. I'd be putting my entry just slightly above the trend line, because if it breaks, you're going to get in on the break of the trend line. That's why I get to plan these like this. And I'd put my stop behind the structure lows. And then all of a sudden you'd be filled right here when you get the signal. You'd probably drag your order up a little bit, and then you would already be out for a target, like boom, boom, boom. Now I've got it set to 0.5, 1, and 1.5, which gives me, I like to take profits as it's happening and ultimately scale out. I can trail or I could move things after, but I like to move that way in that concept, which is why if you take a look at the NASDAQ, I can't, because the NASDAQ from a money management position doesn't give me that luxury. The NASDAQ is a bitch when it comes to stops and big ticks. So what you do is you trade a micro. If you want 3 targets on this NASDAQ trade, you trade a micro, yeah? I'm just a real trader, guys. I'm going to say it as it is. I'm not here to impress anybody. I'm here to show you what really rocks it, and I've really seen it rock it. So, you know, if you're interested in changing the mindset and the concept around how to trade a bit, I can tell you right now, this is really going to produce some huge trades if you learn it. Good thing here. Let's take a look at the NASDAQ, or the let's take a look at crude oil. Crude oil, or excuse me, gold. Gold has an uptrending structure, but if you look carefully, dominant bias has shifted. Big impulse, pullback. Big impulse, A, B, C, pullback. This is all a big wave. And then it pulled back. But if you think what happened here, it pulled back and it took out the floor. And now it's retesting. Dominant bias is down. So even though we had an uptrend, this is the first time we're really shifting the structure on gold. And if you take a look at what's happening, I should be looking for bearish trend line breaks. I should be looking for a bearish trend line break in here. Now, a couple things you want to pay attention to is the stop sizes and where you're placing your stops, okay? Ranging markets we're going to talk about. I would actually just stay out of ranging markets until you're really good with this, until you understand what's happening, okay? And for entry, the biggest thing is, where do I put my stop loss? Because that's going to dictate your targets. Well, I normally like to put it around the biggest swing leading the trade. So this to me is the biggest swing leading the trade. Not this, the biggest structure swing that led the trade. Okay. You could put it here. It's just it's going to push your targets out a little bit further. Yeah. Okay. You could put it there. It's going to push your targets out a little bit further. But if I put it here, you're going to see that it dropped my size down a bit. I'm only allowed to take it. So then I'm going to shift my size to a 1-to-1 and 1.5. Yeah, just like that. Because it's all about money management too. And that means that I'm going to set up my break even as soon as price gets here. Because if it doesn't break down on the second trend line, well, I don't want to be in a squeeze if it doesn't decide to break down. Okay. Let's go NASDAQ. Now, a couple things that I can do as an experienced trader that maybe you guys don't know this or not. But I like to also take a look at volume if I can to see where the volume has shifted on this environment. So we've broken above the point of control. There's a point of control up here. There's another point of control here, which means this position of a build, there's going to be some profit taken here. We should see a pullback, boom, boom, which is why I like to have targets in here, which is why I like to scale out, because you never know what's going to happen, right? You never do. You just never do. Let's change the ticks per setting. This is just me sharing my own experience with you guys, right? It's not part of the strategy. Where's the point of control? There it is right there. And then low volume drops off here. So I probably look to scale out here if I can take a profit up top there. You know, I'm already in good ways here, so we'll see. But you can see the break trade just happened here now. The next break trade. And if you're in this trade, you're sitting pretty. Okay, if you're in this trade, then the S&P is probably ripping a lot faster. It's been just exploding. Yeah, the S&P is cruising. So you can see this is where it's, and I understand it takes a bit of time to learn a few things. Yeah, it takes a bit of time to learn these concepts, but trust me, if you learn what I'm doing, you don't need all this extra shit. Like you don't need the volume, you don't need all that. Don't let it confuse you. I'm just using it because I'm a trader and I like to add things if I need to pay attention to some extra data. But I know that's a point of control and I know it's a low volume node. So what I can do is I could move my stop to break even as soon as I get to, right? As soon as I get to, oh, I don't want to do that. Let's just do this to 150. Give me a second, 150. It's not letting me do that. Okay, so I'm just going to move my stop to break even because it's approaching the point of control. And I just like, you can see here that as it approaches this area, right? Like I would normally have already taken targets. If I was trading a micro, I would be taking targets already because I like to have targets at a 0.5 multiple, a 1 multiple, a 1.5, and a 2. Easy algo only allows for 2 targets or 3 targets. So that's why I put a 0.5, 1, and like if I look at the gold trade, like I've got normally what I would, or the S&P trade, let's go to the S&P. You see how I have it at 0.5, 1, and a 1.5. That gives me a full 1-to-1 R multiple on the trade. The way I scale out, it gives me a 1-to-1 on the trade. Okay. And that, yeah, maybe I could put a 4th target on the easy algo, but it's a really, really hard indicator to develop on. So let's see if we can get up to the point of control. You know, anything in the NQ now is a free trade. Yeah. So anything that happens is a free trade. It might give me the hesitation. I'm not liking the way that the NQ has been trading out of this area. So, you know, taking an early break even on that might be too soon, but take a look at what happened. It shifted the volume on the breakthrough, right? Shifted the volume on the breakthrough. Okay. So I'll give it, you know, I'll move this down to, you know, hopefully get a target at the highs because, you know, I know that's a low volume node. And if they can get through that high volume, then they should reject off low volume and we'll see, right? Let's move on to the next trade. Like there's all 3 targets hit on the S&P, right? Like, and why would we want to trade the S&P and the NASDAQ over the YM? Because they're stronger markets. The Russell never gave the setup. The Russell never had a bearish trend line, which is why you get to look at a couple markets. Had I had this, or had this have given me a zigzag here and point in that trend line, I would have been able to take the break on that. But I have my settings tweaked at very strong settings because everything's set to the default. So if I look at the NQ, I got the trade on the NQ. I look at the S&P, I got the trade on the S&P. The S&P has been freaking rocking it this morning on the impulses to the upside. Okay, the NASDAQ, it's taking a little bit of time to kind of prime itself, but if it explodes, it could explode. You know, the NASDAQ, when it wants to move, it freaking moves. When it doesn't, it doesn't. Okay, the Russell, there's been no trades. In the YM, there's been no trades, but I wouldn't trade the YM because it's a weaker market. Crude oil, we haven't talked about it. Let's talk about crude oil for a second. And see how gold's having a hard time. They're really coiling. There's going to be a huge break on gold. We're just going to see which way it goes. I know which way I want to trade it. And if it doesn't give me that, then I won't take it. So let's take a look at crude oil. So what's the dominant bias on crude oil? Well, if you have a hard time understanding dominant bias because you're still trying to rock your head around impulses, like most traders can't read impulses to corrections properly. I'm just here to say that as experienced as most traders are with knowledge, they still get this freaking wrong. And why I like to have the indicators on here just for the Emaz is because it'll just get you on the right side of the market if you have a hard time kind of figuring it out, right? Like you would say, well, that's an impulse and that's a correction and that's an impulse and that's just a, like, well, which way is the impulse, right? Well, then you say, well, that's the impulse and then that's the correction and so then which one's right? And that's the problem. Everybody doesn't know what the hell they're talking about, myself included sometimes, right? So what we do is we look at the transition, and what I would do is I would look to be a short bias trader. I would look to be a short bias trader since this is confirmed down. Okay. So therefore, if I'm trading crude oil, I'm not trying to take these longs. Now you could have traded. There's been no shorts on crude this morning, unfortunately. Sometimes it'll set up and sometimes it won't. Had I tweaked my settings to make the swing be a little bit smaller, I probably would have been able to get a breakdown here. I probably wouldn't have been able to get a zigzag here. And it would have connected and I would have got a break signal there. But I'm not ready to mess with that shit. I've set these settings over 2 months of testing. And I'm happy with the default settings because I get the big legs. And so look at these long breaks that would have been, you would have just been fighting the dominant bias. You don't want to fight the dominant bias. Well, what about that one? People will say, well, who cares about that one? What I'm really interested in, if this will do this, I'm interested in this pushing up a little bit, giving me a bearish trend line, and then taking the floor out on that breakdown. Does everybody understand that? And what I'd love to see is I would love to see the market put in a higher high in here and give me some bearish divergence on the big daddy, and it breaks down. Here, I'm going to set everyone. So everybody can talk to everybody. So if you took targets, post it again in the chat box. Like anybody that's using the software, just comment. If you've been trading it, how you've been doing with it. If you need some help with it, let us know. But let's see if the NASDAQ's going to give me the follow through. I like it. I like what's happening. So MJ said she hit both targets on the NQ. The S&P was the sexy trade. And the NASDAQ still is technically, if I was trading the micros, I would have already taken a profit target already. Yeah. Okay. So I'm only looking to take the longs off bearish trend line breaks. Okay. And the Russell's out of the question because I don't have one. The YM's out of the question because I don't have one. Even if you were an aggressive trader this morning and you took the YM like there, you still would not have been stopped out because the dominant structure leading the break was here and it never violated your stop. Now that's a lot of shit to sit through, but it still would have kept you on the right side of the dominant bias. Take a look at how this one explodes through. Crude oil, I would love for this to give me the trend line down. It hasn't happened yet. And gold is. Now, what you could do on gold, normally you wouldn't do this unless you were trading a micro, okay? You could put your stop here and it would bring in your targets. If you were trading a micro, you would be able to adjust 0.5 to 1 to 1.5, which would give you a target in here, okay? See, the NASDAQ hit the point of control and it's giving that resistance, right? So we got to wait and see here what it's going to do. Either way, I'm in a free trade, so this can't hurt me, right? So I would let it, give it some follow through. If you want to take profits here, you could, right? It's there's no issue there.
Looks like gold is setting up there, Sean.
Yeah, so there's the gold trade. Now I'm a little bit cautious with the gold trade, and I'll tell you why. Because it's got to get through here. It's got to get through the lows in here. Okay. So what I'm going to do is I'm going to, and this time of day right now, 10, we're almost at 9. It's almost going into 11 o'clock, right? I'm going to put a break even here. So how many ticks is that? That's 49 to 46. That's 30 ticks. Let's just do break even. Let's just do 46. So I'm going to just bring it up. So if price gets down here, I'm going to move my stop to break even before I hit a target, because this is a dangerous area. If this doesn't hold in here, it's because it's going to do a repeat of this. Let me explain this. We're in a dangerous area for gold. So taking this trade is a very aggressive location, just knowing that we could be breaking into a really big impulse to the downside if this actually holds from this area. If they're not ready to drop this yet, it's going to do this. When was the last time it shifted dominant bias? Here. And what it did was it couldn't break the floor. If it can't break the floor here, okay, if it can't break the floor here, then I don't want to be in this trade in a short squeeze, because then what'll happen is they'll shift dominant bias and we'll get the next uptrend, which means I'll look to go long, because this market's been pretty strong to the upside. Yeah. So taking this short is more aggressive, but you need to know that. But you're still on the right side of dominant bias. Okay. And so this is why I like this. And what I like about this is you can plan the trades in advance. You can see the levels. And, you know, it's kind of, I like it because it's a little bit more patient. It's more patient trading for me. I like being able to see things. I like being able to see the trade set up in advance, knowing that I'm looking to short. So if I get a bullish trend line, I want to wait for that trend line breakdown. And, you know, you could take some profits in that area or just let it run. I'm going to look to go to break even at the lows. And I'm going to be aggressive on my break even, because I'm not interested in sitting in a short squeeze if it can't take out the main floor, or just pull a target up. So there isn't a new swing high. So if you look here, this isn't a swing high. That's not a swing high to me, because I have the setting set to really big swings. And so that's the difference between my defaults and everybody else's trend line settings, is I'm only looking to take the really big swings, which means this is the last swing and this was the really big swing. My stop's pretty tight, considering. You say, what do you mean it's a 65 tick stop? That's not a big stop for futures. Most traders think that you're supposed to trade futures with 5 and 6 tick stops. Like, I really don't know the mindset around that, because I haven't really seen anybody consistently hit really big profitable longevity in that type of a business model. Now, what do I know? I've only been trading for 10 years and I've built 50 products on 5 platforms and I've taught over 7,000 traders. Take it with a grain of salt. I'm not here to boast my own horn. I'm here to give you my own experience. I have not seen a lot of very successful traders trade with really tight stops, because the risk of getting kicked out of the market, and you're also putting a lot more stress on being right about the market direction. And if you have a tight stop, you don't have yourself much time to know that, right? Now, if the NASDAQ can't get through the point of control, I'll most likely get sucked back into that range. But I'm okay with that, because I'm not interested in holding on to this trade, since the NASDAQ's taking its sweet time, right? And looks like I'm going to get stopped out on the NASDAQ, which is fine, guys. If I get stopped out on the NASDAQ, I'll get stopped out, right? But at least if you were following the concept of, you know, having multiple targets, you would have already peeled off T1. Okay. Calculating the Wrangle size is really just subjective to me. I know what the average 1 minute Wrangle setting is. So I will normally just set that, and I can adjust the offsets. I'll give you my bar sizes. So yeah, and this NASDAQ trade is just not giving much follow through, which is fine. I'm okay with that. Okay. And if this can't break through this lower level here, then you know, I really will expect to get a little bit of a hardship on this, right? It needs to be able to take out this floor here. It might come back up and test average prices before breaking down again, which is fine. The S&P was the trade of the morning. 2 trades of the morning. It was really, really good trades. If the S&P can rip again, it should pull the NASDAQ with it, because the S&P the S&P from a correlation perspective is actually weaker than the NASDAQ. So if the S&P can lift, it should by definition pull the NASDAQ with it faster, but it's now I've got the NASDAQ set to some pretty big bar sizes, right? And that's because the NASDAQ has a big tick movement. So write this down, Jim. I've got the the ES on a 5-3-10 setting. So write note on that.
Yep.
5-3-10 setting. The S&P is on a 5-3-10.
Yep.
The NASDAQ I have set to a 35-70 reversal, 26 offset.
Okay.
You could do a 25 offset, or it doesn't really matter. But I just like to see the way that this price action trades. And the Russell, I've got the Russell set to 6-12-32. So 32 is the reversal, 12 is the offset.
Yep.
The YM, I have the YM set to 16-12-32. Crude oil, the crude oil I toggle between the 6-3-12 and the 7-4-14. I go back and forth with that.
Yeah.
Yeah. And then the gold market, I take a 6-3-12.
RTY is probably 16-32-12. You mean?
Yeah, 16-32-12.
Okay,
yeah,
cool.
Yeah.
Got it.
Now, this isn't looking like it wants to give the follow through because it got stopped on the point of control at the highs, but that doesn't mean it won't. It just means that it might come back into that consolidation. A lot of times when you get into this time of day, it's consolidating here, and then you don't get that really big breakout till later. Like we've seen some really big trades take place in the afternoon, which is really nice because if you're on the right side of the big trades, you'll see it happen. And gold looks like it's trying to trade a little lower. We'll have to see. Now, remember, gold is a little bit of a tougher trade here. So you got to understand we're testing lows. There's a lot of support in here, a lot of support. So this is why I'm expecting them to try to come down and test them a little bit. We are with negative volume analysis. We do have negative volume helping that, meaning there is volume momentum helping our trade. It's just this time of day for gold is really kind of not the best time for gold, to be honest, right? But, you know, I just taking this for demonstration purposes. Okay. This would be nice if this is the range retest and it doesn't go back into the range. So you see what's happening here is they're retesting the trend line break. Do you see that? A lot of times what it'll do is it'll break, and then that's why you don't chase price. Like if it breaks up here and you get the signal and you put your pending order in here and it lifts without you, don't chase that. Don't go after that like an idiot. Like just be a good trader and wait for the retest, because if you miss it, you miss it. But almost always it'll come back and retest the trend line break. You can trade this at any time you want. I mean, there's a lot of pre-market moves, right? There's a lot of pre-market moves. This is hitting the trend line retest. So if this decides to pick up, this could give us that extension. And if it doesn't, well, my stop set break even. It's a free trade, right? I'm just not liking the fact that the NQ didn't give the push to the highs. It got stuck at the point of control, which is just volume resistance. And gold is just sitting around, right? Gold's just sitting around. So we'll see what happens on gold, right? We'll have to give it some patience. Now, inversely correlated, if the indices lift, it should by definition push gold down a little bit, right? But And if this sucks in, it might suck in further and come up and hit that average price. Remember, this is the 200. So it might come up and fill at the 200 and continue down. It might squeeze here, right? We don't know this. And if it does squeeze here, this will be the transition that holds the lows. And we don't know that. But I will take a stab at it. I will definitely try and take a stab at it, knowing my dominant bias is short. But as I mentioned for gold, it's the harder trade because we're in a very strong uptrend with structure and we are shifting dominant bias in the immediate impulse. What'll end up happening here is this becomes impulse 1, pullback 2. If impulse 3 fails, if the buyers are too dominant long on gold, what'll end up happening is this will shift into impulse 1 again, which is fine. That just means I'll take a stop here on trying to prove itself. And then I'll take the rest of the trades this way because the market's telling us where it wants to go, which is why I don't get married to any one position, because I understand that I'm on the right side of that. Is everybody learning from this? Now, I took these trades yesterday. Where is the trade yesterday? I don't know if I have it here. Yeah, there it is. I took this short. I took that short on the retest, which was very aggressive. I could have taken this one. A dominant bias was short, right? It was a tougher day. Let's go NASDAQ. If the NASDAQ can lift, like, let's just leave it here. Let's just watch these two trades in parallel because we already know what it looks like. Let's put some volume on this. See, it's coming back to retest the volume, the value area high. It came back to test the value area high in this area, right? That's exactly what it did. It tested the value area high for a retest. And if it's going to lift, it's going to lift all the way up. If it's not, well, no risk, free trade. There is point of control here that's shifted a bit. That's why it's getting stuck there, but it could be adding, they could be adding to their position here. Looks like they want to sell here. Looks like they're going to come down and sell that. So yeah, looks like they're going to come down to attack that. See how a lot of selling coming in, a lot of big sell pressure in here. They're not ready yet. It could go either way, guys, but they're having a hard time lifting. They're having a really hard time lifting here. It's just the NASDAQ's trying to build a bigger position. That's just what's happening. The NASDAQ's trying to add to their position. They're trying to drive it down to feed more volume. And because it is a stronger market, it is definitely a stronger market. The Russell has held its strength. And the NASDAQ's what's going to happen is the NASDAQ is, if the NASDAQ can rip to the upside, it'll take all these other markets with it. The ES is having no problem. And if the ES can lift, gold should break down, eh? If the ES lifts, gold should break. Now, I don't expect everybody to get this right out the gates, but what I do expect is that if you're interested in doing what I'm doing here, you need the trend trader. Everything else is free on the websites and we can give you the workspaces. So here's what I'm going to do here just to kind of make this very simple for everybody. Okay. I'm going to throw a few things in here. How many of you guys do not own the AT Trader? Can you guys just type an N? If you do not own the AT Trader, type an N. Okay. This is a pretty freaking bold statement, but in 10 years of developing algorithms and running trading rooms and doing all of that, this has actually been one of the most consistent methods I've ever seen, which is why I'm doing an AMA on it, which is why I'm going into so much detail with it. It's why I'm trading it in the morning and putting pictures in the Discord on it. You guys know my history with running the trade rooms and the profiles, and like, there's been a lot of trading. Many of you guys have been with me. For me to say that is a pretty bold statement. Yeah. So what I'm going to do is I'm going to give you my workspace. Okay. My chart templates. I'm going to give you all my default settings. Now, you may not think you might just expect that. No offense. I don't work for anybody. I own the business. 2 months of my time is worth a lot in my eyes. I don't know about you guys, but I value my time more than anything, and my time is worth a lot. Okay. So I spent 2 months prepping settings on this for myself, not just for everybody else. So the fact that I know the settings and the bars and the right conditions for these markets and the swings and all that is because I spend a lot of time visually backtesting all these markets. So I'm going to give all of that to you so that you don't have to go through another 2 months of tinkering. Nobody needs to do that. It's a headache, but it's really necessary. Yeah. Then what I'm going to do is I'm going to open up the launch pricing from ARC when we did the webinar last week so that everybody can get an opportunity to save massively on the release of this. Okay. And then what I'm prepared to do, not this week because I'm traveling to Canada this afternoon, is I will open up a private trade AMA next week again to help everybody just wrap their heads around this again, right? Jim and I'll come in there because we got Neural Street's got other trading rooms running. We can't pull those educators out of those classrooms and say, hey, do this. Like I know Gilbert's using this in his trade room. I know that Roy's running the algos with the VWAPer in his room. Jim and I are the only ones left to kind of help this, help you guys rock this, right? And so what I'm prepared to do is if you want hand holding, I'll have our team. I'm not liking the way the gold's trading, right? I don't like the way it's holding down here, but we'll have to see. And, but you can see what's happening on the NASDAQ. There it goes. Rocket, get me to the highs, get me to the promised land, right? So what I could do, knowing my risk on the gold trade, like what is my risk? 1620, yeah? So the NQ is having a hard time getting through that volume. And considering that I haven't taken a profit on the NQ and I only am trading one contract, I could take my profit here, considering that would be at my first and second target areas, right? That's definitely doable. Okay. Looks like to get some sell pressure. I'm going to go and bank a few more ticks in here, try to get some more profit. Just try to put a little bit more dollars in the bank. If it gives it to me, great. Okay. If I miss out on a whole bunch more money, it's nothing wrong by putting some coin in the bank, guys. I would normally be out. If this was a micro, I'm taking profits there. But if this was a micro, I would have never done that. I would have never done that because I would not have to do that. I would be trading with 3 contracts, 3 exits. Yeah. So what we're going to do here, and we'll watch gold now. So, I don't like the way gold's stuck in this kill zone, and truthfully, it could do either way. If the indices lift, it should push gold down. But if I can get profitable on this, I might wait till it breaks the floor. Right, we'll see. Give it some time. Give me 1 second, traders.
Yeah, honey, you could use this on stocks. You just got to determine what the range is on each stock and determine your time frame too. We might be using it on a 1 minute on futures, but that's probably not going to make sense on a Forex or stocks. You're going to want to use bigger time frames on those.
Yeah, and so like I said, out of all things aside, gold is the more dangerous trade. And normally I would love to be trading long gold. Like I'll just tell you the way my mindset is. Like if I know, like let's just go and change this to a 15-minute chart for a second. Okay. Dominant trend bias is up on the 15-minute, but we've overshot the 200 even on the 15-minute. Let's see the 30. If we've overshot it on the 30, yeah, we're in a really big time frame. We're in a 30-minute level of support right now, which makes it dangerous. Yeah. Now that I don't want to talk you out of that trade, but just knowing what I'm trying to explain is that we're in a dangerous place for gold to break down from here, because if it doesn't really want to break down heavily, then I would prefer personally to trade to the long side on gold if it can transition back up here. Does everybody understand that? And that would almost be a better play from risk management, is to just get out of this trade and to suck up that $200 hit, because it's just a better read on the market. Like gold to the upside would be the better trade. If gold transitions back to the upside, it would be the better play, right? Does everybody understand that? Like NASDAQ, no question about it. ES, no question about it. Like these markets are ripping to the upside on all time frames, but gold is not. And so that doesn't mean I won't be able to get down and get into some profitable territory again, but I'm just trying to help you get a better read on dominant bias. Dominant bias is the most important part, because if you're on the wrong side of dominant bias, you're going to get your ass handed to you. And my job is to help you understand that. I really want to make sure you understand it. And so, you know, I want to make sure that I can get everybody on the right side of that, right? Like, and if you were following what I'm teaching this morning, most traders won't trade the gold market because the stops are too big. You're going to stick to the micros, right? Let's just clone this. Let's clone this chart, duplicate a new tab. Let's move this over to here, and let's change this to the MES. Because that's where you're going to be really doing well, is if you're able to trade the micros with multiple targets. And like we're just loading it. So if you look at the micro, right, the micro gave, you had the setup here, and you would have had a little earlier. Take a look at where we had this one on the micro. You had it here. You had these trades here. Stops would have been below these anyways. So whether you took it on the S&P here or you took it on the micro here, your stop would have been here. Okay. You know, just showed a little bit slightly different price action, right? You could ultimately, you know, change the setting a little bit. Maybe, let's see what that does. Yeah. Putting it to a 50 on the micros, MFI stays the same. Yeah, putting it to a 50 on the micro would have been a better play. Yeah. Putting it to 50 on the micro. Make a note of that. If you're trading the MES, change the swing strength to a 50 to tweak it to be very identical to the S&P. Now I'm just going to close out on the gold trade, because I just don't think that, like, it might rip. Murphy's Law, it'll probably rip to the bottom of the ocean, you know. I don't give a shit, because dominant bias on gold has been up on everything. This is the first fake out. I would much rather see, if this takes out the lows, then I have no question about it, I'm going to look to short. But this is a very big higher time frame area, and I'm more interested in that higher time frame holding and shifting back above the 200, because then I want to take the trades this way on the trend line breaks, because that's what's going to give me these guys. Like, I can't produce trades out of thin air in the markets, but what I can tell you this is, I'll take a look at the last time we shifted dominant bias to the upside here. We got above it with a higher high close here. right there. Okay, so let's just go to gold and just take a look here for a second. Where did that happen? Here. So look what happens. Like, you get on the dominant side of the trend breaks and you're cruising. Like, I took this trade yesterday, missed this one here. My stop would have been here. This would have had this, but I would always have it on the bigger swing. This here, I had my stop here. And I got targets here, trailed my stop. Right, like you can do, like, and this is where I mean, like at the beginning of this event, I said, I've just learned to develop faith in the big moves, because when you're on the right side of dominant bias, this software gets you in at the beginning of the freaking big moves. And I've never seen that, because I'm always thinking like all the other traders and I'm trying to fade the trends. Well, if you're trying to fade the trends, you're doing what everyone else is, and you're not on the right side of the opposing side. And I believe that if you kind of think outside the box in an unorthodox way, right? Yeah, my faith paid out in the NQ trade. How did it work? I'd still be in it. It's not a problem, right? And but you can take a look. Like, had I not have, like, I moved my trail stop too soon yesterday, and that's just me. I'm just getting familiar with gold, haven't traded it too much, trade more of the indices, but getting in on the trade here, this was the trade here. I got in here because I got the signal here and I had another signal here and I missed this one. So I got in here, okay? And I took my target here and I moved my trail stop too tight, right? I should have kept it at break even and let it run, because you can see the math here. You can do the math. Like, most traders aren't able to sit through an impulse, see it back, sit through and see this. Like, most traders aren't able to sit through that correction because they're too emotional and they give out on that. But I'm here to tell you that this software allows you to capture that. So the more you start using it, the more you start understanding it, like at the S&P, right? Impulse, impulse. Okay. Even the NASDAQ, I'm still in this impulse, it's still sitting there. And this will probably, like, what it's doing now is it's doing a trend line retest, right? Broke down. That's why you don't chase it. It almost always comes back to retest. I just don't like being on the wrong side of the big picture dominant bias. This is a transitionary moment for us, right? Now, what you could have seen here on gold, what you normally want to do is, I'm looking for a full candle close, write that down. If you're looking at shifting bias before the cross happens, you can get in early on transitions, one full candle close below the 200. High, low range, not half, not freaking a quarter. And what about the wick? No, none of that shit. One full candle. I need to see one full range on the 5-minute candle get below that area. So let me just take a look and see, had that concept basically paid out on gold, I would have been able to take that breakdown. Now, the problem with this breakdown is there's no swing to put your stop. So where do you put it? The EMA. And it's a big freaking stop. So the problem is that most traders aren't capitalized to trade gold on those big stops. So you wouldn't trade gold. I'm just trying to give you concepts here that, but if you did trade that and you followed what I was teaching you, I'm just going to increase my risk percentage a little bit so that I can get to three contracts. And I'll show you how I would ultimately, 1, 2, 3. So let's do this, 0.5, 1, 1.5, yeah? So this would be the trade plan if I was taking that breakdown on the first transition. Do you understand now? Like, you're going to have to sit through some retracements. You could have taken 2 targets and moved your stop to break even, right? and you still would have captured the entire move. Now, Paul's saying when you set your TP at a maximum of 2, don't you miss out on some larger? Well, it really depends on your money management, Paul. Right? I'm risking 4% of the account to get an 80 tick stop in here. So that doesn't make sense. So if you want to trade the micros, you could definitely do that and you don't have to have an issue. This is a full size gold contract, right? So I'm just trying to give you the way I set up my targets, half of multiple. I like to scale out and put some cash flow in the bank because it helps psychologically. Yeah. But that would have been the only short that was valid since this one. And if you take a look, it is moving in the direction. It's just, you didn't get the cross on the 5 minute to here. And this could very well take out the floor, go into a bearish run. And, you know, that would have been a really amazing trade, right? Because it still hasn't failed. It hasn't gone against us. You're still in profitable territory. I'm just telling you my read on big picture bias. Okay. Take a look at the NQ stalling out. I don't think we're going to get any more movement, guys. But, you know, it's another really good green on the screen morning, right? And I've traded, you know, I haven't had a loss in the last 2 days. I can't give you stats on the full system because I don't have them, guys. Like I've been doing events and training, but I've taken a bunch of trades, and these are the trades that I've taken, right? And just to kind of teach the concept and you know, just to kind of show you what I'm doing, you know, and you know, that's just, you know, these are the trades, right? Break it down by trades. Right. And it's, you know, it's, to me, guys, this is where my focus will be, you know, for a while, until I see that there's something better, you know. And so what I want to do is I want to give you guys an opportunity, you know, support setup, remote if you need it. Now, a couple things I want to do when I show you this. When you use the auto trend trading software, just so that you know what comes with it. When you come in here, you got an indicator, how to activate your license. Okay, usage and settings video. This is a deep dive training video on the user documentation, the training. Like this is a very thorough video made by a very, very thorough person. And there's no confusion on this. The user manual is very, very comprehensive. It's a very big document. It breaks things down. There's workspaces and templates that I've built. What I'm going to do right now for you guys is I'm going to actually set up this workspace with you to have the micros on this. Okay, so let's go through the NQ. Let's set up the, duplicate a new tab. Let's set the micros up together. You don't need the micros on the big picture bias. You can use the big picture bias. You can use the big picture bias on the regular contracts. Okay, that there's no issue there because you're using micros, so it's still the same concept. Okay, but if you're going to be trading, give it a second. It's calculating here. Did you guys learn something? Did you guys take a bit out of that? Come on, NASDAQ. So let's load this into the micros, M2K. I just want to check the settings, and I want to set the settings for you for the workspace. There's the M2K. I just want to take a comparison to the NASDAQ. NASDAQ, a couple bigger, a couple little bit more. See how it's too much zigzaggy in here? I'm going to set this to 50. Just a little bit of a different read. Yeah, see that I'm going to set this a little bit more to 60. I just want to set this, there it is. Maybe 70. Oh, I just want to set this. There it is. So if I can just try to mirror the NQ settings, see there's the trend line break, and then there's the M2K. The reason they're not identical, okay, the reason they're not identical is because, yeah, the reason I'm not able to download historical data is I don't believe that Kinetic allows you to download historical data until after hours, which is stupid by all means. I don't understand it, but M2K is R2I. Yeah, that's probably my mistake, guys. Apologize for that. MNQ. Yeah. So thank you for that, MJ. Yeah, appreciate that. Yeah, I'm only on my second cup of coffee, so I usually need at least 3 before I wake up, but yeah, just give me a second. I'm going to go through your questions. Sean, you were using the NeuroStreet risk reward tool to figure targets and stops during the launch. I don't see that on my drop down menu. Yeah, you just got to go in. It's the free tools in the add-ons. You got to install it. So just ask for the NeuroStreet indicators. It's part of the NeuroStreet indicators. It's the NeuroStreet risk reward tool. So if you're a member of the gold program in NeuroStreet, you should have access to those draw tool functions. If you end up buying this software and you're using this, then you know, Jim, maybe you can just help him get a, you know, figure something out for him and help him out. Help anybody out that needs the help, Jim. Get him going, crushing it.
For sure, no problem. Let me know, guys.
Okay, so there it is. Let's see the settings on the NQ. See the break. I'm just looking at the breaks to confirm that they're in the same places. Yeah, so let's bring this down to 40 now. See if, oh Jesus. Let's just see if it's too many. No. Yeah, it's gonna reset here. Give me a second. Come on, don't do that to me. If for whatever reason I get a lockup, then what I'll do is I'll set the workspace up for everybody and I'll get it to you. But maybe we're getting a big push in the data right as soon as I hit reload, and Murphy's Law on that one. So while we're waiting for this to do its sweet dog and pony dance, I just want to kind of go back into this. Okay, we did this last week, and if everybody is on board with this, then what I'm going to do is I'm going to, you know, Jim, if you want to, I don't know if you have the link. I have it here. I'll get it from Ashley. I'm going to put the link.
I got it. I'll put it in there.
Here. That's the link. I strongly encourage using the discount, because if you're in, you're in. And what we'll do is, there it is. The lockup's done. So let's just take a look. Yeah, so the settings on the N2K don't need to be changed. Yeah, the settings, there was a short, there was a short, there was a long, there was a long, short, short, long, long. Yeah, that's the same. I think the NQ is going to push up for a huge freaking lift, and I don't know that for sure, but that's my take on it. Let's just save this workspace. Every time I load a new chart, I like to save it, because that way if something happens, I don't have to go and rebuild it. Okay, now let me run a poll in here, and while I'm building, because I'm building this out so that you guys don't have to. So that's kind of the goal of my objectives here, is to help you guys out. Okay, so I need to know, because I need to know what to do to prepare for next week's training. So I need to know how many of you guys are in it to win it. Like don't put yes if you're actually not doing this. Like if you're in it, I need to know how many people are going to come to the that are going to get the software. We're going to get it installed. I'm going to have all of the stuff ready on your PC, because next week I'm going to trade with you and Jim's going to trade with you, and I'm going to make this easy. I designed this, so I'm going to make this easy for you. And I want to make sure that everybody understands it, because all I truly care about, I don't give a shit about selling software. What really makes me happy is when everybody's catching the big trades, because I love catching the big trades. Like my whole life, I caught mediocre trades and some small trades, and I caught a few big trades. And I was a great trader. I am a great trader. But now I'm catching really freaking big trades. And it's kind of like, thank you, God, for opening up the opportunity through the 10,000 hours of screen time. Okay. So, and if you're not sure yet, I understand. If it's questions on risk management, or maybe the stops are too big, maybe you're a scalper, maybe it doesn't really make sense yet, give me the opportunity to change your mindset through demonstration. You know, there's a lot of programs out there. There's a lot of software out there. There's a lot of systems. $795 is not a lot of money to learn something from a really, really good trader like myself, and to really watch it done in front of you. And the key is that you can leverage that experience, right? Now take a look at gold. My read on gold was spot on. Not interested in shorting the breakdown. We're in that really tough area. Even though I took the short, I exited on purpose. Let's go in here and do the Russell now. So let's clone the Russell. Let's put the micro in here. M2K, I got that right this time, yeah. Okay, for those of you that said yes, you have to purchase today. You got to get that link. You got to use it. This is an AMA extension. You got to get that. There's no extension on the timelines. Like, just got to go in, get it, because we need to get you up and running. We need to get your software installed. We need to get you using the tools. And then what I want you to do is you can see the February 10th, like that's several days ago. I'm reopening the launch, right? And yeah, for whatever reason, Ashley's not here right now. If you have any issue with purchasing, like a link, or it doesn't accept your credit card or anything, can you just send an email in to Jim? Can you put the support email for ARC and Ashley and you, and we'll help them and whatever needs to be done, right? And just make note of Steve needs some help and that type of stuff, okay? So I'm going to end the poll here for a second. I'm going to ask another question as I load this. For those of you that are not sure yet, or maybe you just don't understand what we're doing, or you spent a whole shitload of money this year and you just really want to make sure that you don't want to buy something again and it just goes to waste. Like, I get all that. So the key here is if you really just want to talk with someone, or if you want Jim to go over some more trades with you, or if you just want to get a little bit more of a personalized discussion, take this poll and just ask Jim to contact you. And Jim will spend some time and he will reach out to you, and you guys can get on a call. Do me a favor, don't stand him up. Like, this guy's time is very valuable too. Like, Jim is a very busy man. Don't stand him up. If you want to talk to him, show up, change something on your schedule, right? Like, that's the key, right? Like, if you need to speak with Jim or you want to talk with him, that'd be great. Okay. And he'll follow up with you with an email to book a time to talk, or he'll just call you. One of the two, right? Just answer your phone. Because if you're asking us to contact you, we're going to contact you, right? I don't think we need to make any adjustments to the RTY. Everything looks pretty spot on. So I'm going to save this. And the micros might be the best solution for this system. I would almost think that the micros would be the best solution for this system, given the fact that you have larger stops and many of you are probably trading combines. I would argue the fact that you could get funded rather quickly trading this system. Like,
yeah, I would say too, like I trade on a funded account, and most of the trades that I would take with this, and I have taken some on my account actually, they've worked out well, but five micros is better than a full size because you can really dial in your risk. So 3 to 5 micros is great.
right. So there's the M2K, the YM. Let's clone this bad boy, duplicate a new tab. I'm setting this up so you guys don't have to, guys. Okay, so we've got a bunch of people asking for calls. Jim, you're going to be busy here for the next day or two. Okay, that's
All
fine.
good.
So guys, I'm going to end the polls here. Let me set this up with you guys, and let's just do this. This is the MYM.
Lenny, that's a great question. We are partnered with Lilu, so I can tell you you'll get some good offers on Lilu if you go to our partner page on our site. So check it out and make sure you get in. You can get a nice discount with them. So.
It's a great question, Lilu or Apex. So here's my thoughts. We work with 10 prop traders firms. We have discount coupon codes across all of them. They're in the funding business. We're in the education business. So it really just matters to who offers you a deal and whether you like the structure. I think they're all freaking good. I would argue the fact that Lilu and Apex are probably the top 2 in my opinion. And do I have a preference over them? No, I don't. I think they're both good. It's just a matter of what you want. I find Lilu is very easy to work with. They're a much more established company. They've been around longer and they've got a team behind them. But that doesn't mean Apex not good either, right? Apex offers some competitive pricing and also some pretty good parent companies and stuff like that. I think Lilu allows you to set up sub accounts. Is it not, Jim?
Yeah, you can get as many accounts as you want really with them, as far as I know.
So but you can set up a parent account and run 28 sub accounts if you want to.
I think Apex is doing the same thing too, because I know we got a couple of traders that are doing that with them too. So I mean, it's just all I can say is personal experience. I'm with Lilu and they've been great for me.
So here's the downtrend. Here's the uptrend that I want to short on oil. Like, there's no confusion. Oil's in a downtrend. You can really see the impulse, correction, impulse, wave 1. This might even be wave 2 pullback getting into A, B, C, wave 3, right? We don't know that, and I don't really care about all that zigzag nonsense. All I know is that my dominant bias is short on oil, and ultimately I have not had an opportunity to short oil yet after that transition. If you were following the concept of the bar close, like I was telling you, then you would have been able to get in to oil on this candle. That would have been your first transition for the transition trade. This is the first transition, the pay to play. It's kind of like poker. Everybody puts their blinds down, right? So you can see the hand. But you would have been able to short that breakdown right here for a really big short. That would have been a short right there, stop above the structure high. Okay. And you can do the math on that trade. Now you would have had to sit through some noise here, but you probably would have been out already on this push down. Like, at least T1 would have been objectively hit here, T2, you'd be at break even. You wouldn't have caught the next push. Yeah. But I'm interested in this floor right here. Do you see that? Do you see that uptrend now? That's what I'm interested in. Why? Because that's the short. So I now can see where I can start planning my short on the crude trade right here. And I'm going to wait for a zigzag before I can adjust my stops. I'm going to set my money management in here to, to be a risk reward function. Normally I'll go 1 to 1.5. If I don't have the ability to trade 3 targets, then what I'll do is I'll go to a 1-to-1 on T1 and then a 1.5-to-1 on T2. Okay. Actually, we give I'm using the NS Rankos, but I think we've given them to ARC to give to all of our users. So if you want to use the Rankos, it's part of the download page. I don't even know where it is here. It comes with the bar types, free Wrangle BXT bar types. Yeah, you get no, that trade panel is a NeuroStreet product. That's that took me a couple $100,000 of coding and a lot of time. Yeah. So that's part of the NeuroStreet tool sets. If you want to use that trade manager on the right hand side, that's a NeuroStreet product. So a lot of traders, I get this. A lot of traders, they say, I've spent a lot of money this year buying systems. I'm not sure I want to spend more money on things. Well, let me tell you this. I've spent over $2 million coding software to find this product. Do the math. I've built 50 indicators on 5 platforms and I've employed a team of 14 people. Okay. To really find this. And I'm saying it. I love this. I love this. I love low volume trading. I love that. There's many different ways I like to trade. But to me, this has been my all-time favorite. Just me personally as an individual human being, right? Like I find that I gravitate to this very well. And I find it easier than everything else. That's just me. Right. So if this takes the low out, I'm going to clone this and right, which means I'll probably end up doing a lot more training on it. I'll probably work with Jim a little bit more and, we'll probably do a lot more. Yeah, Keith says I find it easier too. Yeah. Yeah, isn't that the point? Trying to find the easiest way to make the most money. Like if it's going to cost you money, it might take you 5 years to find your groove, but if you find it, isn't that the whole goal? It's kind of like when you're playing a Zelda game or you're playing a quest game and you got to learn to get through the levels. You might lose at the game for a while until you figure out the cheat codes and the tricks, right? And then all of a sudden you really can throttle it, right? You don't get upset that you wasted those years. You thank the process. What's the micro contract for crude oil? MCL? I don't think I have micro data for crude.
Yeah, it's MCL. If you have crude, you should have MCL, I believe.
Oh, there it is. Yeah, I'm an old Zelda fan too, Lisa. Yeah. Yeah, I grew up playing that. I loved it. It was my favorite game of all time, actually. See, the NASDAQ's just sitting there doing its dog and pony show. But it would have given me further targets. Like had I just stuck with it, it pushed up. Right. So you can do the math. Like if I'm using the risk reward calculator, there was my entry. There was my stop. And this has been would have just missed my second target. So you understand where I did take a target would have been T1 for me off my trade plan. And I would leave this. I would actually leave this in play like this. It's 1, 2, 3, 4 targets. And that'll allow you to set up your chart trader. And then, so I'm just waiting for the crude oil market to load here, MCL. So let's take a look at MCL. CL, not interested in going long. Don't get psyched out by the buyers right now in crude oil. Like, don't get worried about this. You're going to see some buyers. What you really want is you want to see those buyers come in, get sucked into all the buyers. Yeah, the reversal traders are getting along here, but what's going to end up happening is the trend traders will always run them over. And that's just the way direction trading works. But the wrong thing is most traders are trying to trade every pullback and try to figure out the direction. And I hope this is the impulse. And that's why I find that the break trades are just so much clearer, because when you break major levels, yeah, sometimes they might suck back and fill more orders, but they're normally going to do this. And most people are used to catching this, where this system is allowing you to capture this. And that's what makes it worth its weight in gold, I think. So let's do gold micro. See, take a look. You see how gold just gave the rotation to an uptrend? I don't want to be in gold. Like, I just don't think it's a smart play. I think it's better. Wait for gold to cross the 200. Wait for a full close above the 200, not the 100 traders. Don't do that. The 200. Let it confirm itself. Yeah. Okay. So let's take a look here. Let's clone this, duplicate a new tab. Now, I don't like to trade the euro futures. I just find it moves like a snail sometimes. And I never really gravitated to the currency futures markets. If I'm going to trade currencies, I'm going to trade Forex. But I'd like to say that this was a good AMA. Did you guys like these AMAs? It's a trade room plus a teaching concept plus a settings breakdown plus an indicator breakdown plus a giveaway. Like, I know that we've pitched an offer and all that. I get all that. You got to remember, we're in business too. If we don't have a business, we can't provide the products or services, right? So there has to be a give and take amongst the community to that type of thing, right? Can I kindly ask everybody to go in now? And so let's just do this. Is the settings the same? Yeah, the settings are the same. The only thing I tweaked was the S&P settings, which is fine. I didn't need to tweak anything else. Yeah, I think we're good. There it is. Yeah, so we can move that over. So this is the workspace. Like, what I like about this is it's simple. I'm not having to use a whole bunch of other stuff. And I've got ES, NQ, Russell. Look at the Russell. Like, I wish I would have been able to get a short here on the Russell. Had this made a lower high here, fuck, that would have been nice right there. Right, that would have been the nice, because the Russell's been the leader, yeah, and the Nasdaq's the leader too, yeah. And the Nasdaq is, I think the Nasdaq's going to push up. I really do. You're on the right side of dominant bias. It's just taking its time to build its position, right? And I think what's happening here is they're going to build their position at the point of control. They're going to lift up. They're going to add to their position for a big follow through. And if they take out the highs, you're in the big trade. You're in the big trade at the beginning. That's the whole concept. Okay. So I'm going to save these settings, and I'm going to save this as EA. And then what I'm going to do is I'm going to make your life a little easier. I'm going to make your life a little easier. I'm going to make a duplicate workspace of just the micros. So now we're going to go in here. I'm going to pull out this, because if you're not trading the big contracts, just trade the micros. Okay. Just do it like that. Yeah. And I'm just going to save this as EA micros. Now, if you don't have the easy algo up here from NeuroStreet, no problem. You'll install the software, and you'll need to install this leaders and laggers tool. You know, Jim, maybe if we can get our programmers to make an ARC leaders and laggers tool, write that down and send that over to our programmer in Slack. And basically what that'll do is we can give them that tool, because that's a tool everybody needs. Yeah.
Yep.
Everybody that's using this is going to get this indicator as well. If you already have it, then there's no need. But the concept here is that you can load micros here in this if you want. So let's do the MES. Bear with me. It's the exact same, eh, guys? Like, that's the whole point. M2K is MNQ, yeah. I just like saving you guys hours of time. You know, I think that you guys, it's why you're investing in the products and the services. If we can throw you a bone here anytime we can, let's do it. And there we go. So what we'll do here now is we'll just So what I've done is I've just cloned the workspace for micros. And so that you don't need to load everything. Yeah, I'll probably use micros here. Like if I was trading for a prop firm, you have no choice. There's no way you're trading full-size contracts with this system. If you're trying to get funded or you're trading a funded account, like just the risk management is can't even do it. Like just don't even try. Like that's just me telling you what's up. Great question, leaders and laggers. How am I doing that? So let's go in here and just change these. I'm just going to change these to the micros. Did I make a mistake, Jim?
On leaders, laggers. R2K, Emaz, yeah, looks good. Oh yeah, you put R2K, not M2K. Nice catch, Larry.
Thank you, guys.
Yeah, there it is. Yeah. M2K. I was looking at the contracts.
If it ain't typed right, it ain't working right. But teamwork. So let's just save it for the micros. And at the end of this event, I'm going to upload this in the members area for everybody. Because that's all that anybody wants to do is make a shit ton of money. My goal here is to get you guys all funding in a parent account. If you're trying to trade for a prop firm. And then have a whole shitload of sub accounts that if you take a winning trade here, you take 1, 2, 3, 4, 5 winning trades and you 5x your daily returns. Yeah. Now that means you got to get funded a few times, but you know, I'd like to think you get funded pretty quickly using this strategy if you just follow what I'm teaching. Okay. So Jim's going to create this PDF and make it simple for everybody. It's going to update it and edit this. Okay. And I've got the workspaces and everything. We're going to put the links here again in the chat box. You guys got to get on it. If we can't help you if you're not using it. Yeah.
Yeah, I'll say too. I mean, I've been trading with this over the last few weeks, even prior to the launch, and this is a really killer tool. I love this thing, and the first time I saw it, I was like, "Wow, this thing is incredible." And learning the strategy, it really is a good system. It's probably the best that I've seen from NeuroStreet. And I've been around a few years, you know, and I know all the strategies because I have to teach them. And
well, the thing is that
fantastic.
the thing is that it's not normally what everybody's doing. It's not even just about the trend line breaks. Like if you're just taking the trend line breaks, guess what's happening? You're going to get crushed. But if you follow what I'm talking about using the directional bias, the concepts, and then also leveraging the divergence on the oscillators. We didn't talk much about the oscillator divergence because I'm trying to keep you on the right side of big picture bias. But I'll give you an example, right? In certain, like next week, we'll talk a little bit about big picture divergence and we'll talk about divergence a little bit more because it's only if you need it. It helps, right? It can definitely help. Like take a look at this MES trade for a second. You can see the swing lows, okay? The swing lows here, like they're all equal. Like this is within a couple ticks, yeah? But what's happening here on big picture volume? There's a transition of, there's a change transfer of volume here. This is a transfer of volume over 100 bars. We're not setting this to some random 14 period default here. Like there's a concept, there's a reason for this. Yes. Okay. There's a reason for it. So I do these things because I test unorthodox concepts that normally tend to be much better than subpar standards. And I normally like to move the needle. So traders, I hope you have a fantastic day. You need to get the tool so we can help you. We're going to get you up and running with all of this and the strategy cheat sheet. And then, you know, just touch base with Jim. You know, he's here to help you. If you want to use this tool here, you're going to need the NeuroStreet Gold program. And if anybody in here would like a discount on that, I'll authorize Jim to throw a sweetener in for you. Anybody that's getting into the ARC AT Trader process, then we'll help you out with the gold discount. All right, guys. Yeah, my girlfriend and I are going to Canada today. We're going to be flying to Calgary and then sleeping there and then hopping a plane over to Ottawa. And if you see me on live television with all the truckers, you know, I got sucked into the media, but yeah, I try to stay far clear of that. And I just let people give me the updates once, you know, once we get somebody who knows what the hell they're doing over there. Anyways, traders, have yourself a fantastic day. I hope you guys learned something. I hope you enjoyed it. Yeah, can you guys do me a favor, please, and just go to the Discord and can you just do me a favor and go down into the ARC sections in here and also in the live trading picks. So there's two settings in here, NeuroStreet Trading and the ARC AI section. All I want you to do when you take trades that you felt were good and you're really getting it, just post them in the futures trading tabs and the ARC trader tabs. Just share, like engage with the community, yeah? Because that's what we're here to do. We're here to share and help people. So have a fantastic day, traders. The M2, look at that, it's testing the highs, right? It just give it, look at this, YM. This is a great example of using the correlation tools. I won't take the breakup on the YM. So even though I'm getting the longs opportunity here, you see this? That's the bearish trend line break. It could rip, it could squeeze and just be a huge trade. But pay attention to the fact that the YM has been the weakest market to the party. And I'm not interested in trading weakness. I would rather trade the strength, which will give me the MES, the NASDAQ, and the Russell before the YM. Now, if I was looking to short, I would flip it. I would not short the Russell. I would short these other ones first. And that's how you use the leaders and laggers. You buy strength, you sell weakness. And right now the market's showing strength. So I want to be trading markets strong long. The weaker markets are crude oil and gold. I want to be trading those net short, but I'm not going to do so until I have confirmation of big picture. And crude oil setting up for a really nice breakdown. Same thing with gold. If gold can take out 46, that's the level. If I can short gold, that's the trade right there. Yeah, traders, have a fantastic day. I got to go pack my bags and have some breakfast and get the heck out of here. Hasta mañana. Take care, guys. Jim, you're up on deck.
Yeah, sounds good. Yeah, I've got a lot of interest there. That's good. Good stuff.
Traders, have a fantastic day. I just love Jim's new picture too. He's such a great picture. He just looks so damn serious there, you know.
That I tried to smile, but I thought I just looked goofy, so I just kept it serious. Trading's a serious game.
Shit. And if you guys love these AMAs, I'd love some feedback. Put in the Discord. Put in the Discord because we're going to start doing a lot more of them on special product events. All right, traders, got to go. Take it easy.
Cheers, everyone.